Welcome to Policy on Demand. I'm Scott McCandless. The IRS on July 21st issued Notice 2023-55, providing temporary relief for taxpayers determining their eligibility to use foreign tax credits for tax years 2022 and 2023. Joining us to share their insights on this relief are Elizabeth Nelson and Micah Gibson, members of PwC's International Tax Practice. Elizabeth and Micah, welcome. Thank you for being here.
Thanks for having us.
Great to be here, Scott.
So let's start with a little bit of a level set. What exactly is the problem that this notice is seeking to address, and what is the nature of the relief? Elizabeth, maybe we can start with you.
Sure. To really understand the impact that the relief that the notice grants, we have to consider the background leading up to issuance of the notice. And to do that, we really have to go back to the prior credibility regulations that applied for decades and applied a predominant character standard to analyze whether a foreign tax was a creditable net income tax. That was all changed when the government issued regulations, final regulations in January of 2022, and they imposed a very different architecture for analyzing whether a foreign tax was creditable. And that architecture included an attribution requirement, which tested the relationship between the taxing authority and the income subject to tax. For example, whether the foreign transfer pricing rules met an arm's length standard or whether the income sourcing rules were similar or consistent with the US sourcing rules. Those rules also included cost recovery provisions that required particular expenses to be deducted against a foreign tax base to meet the credibility requirement and for a tax to be creditable. And so pretty rigid architecture was imposed with those final regulations. In November of 2022, the government issued proposed regulations to address comments companies had and gave some relief with respect to the source-based attribution requirement for royalty withholding taxes and some relief for the cost recovery provisions. But that's really the backdrop against which the notice was issued. The notice effectively gives a company the option to apply the prior credibility regulations and effectively ignore the final 2022 regulations with some modifications. And it also allows, so you're applying a predominant character standard to analyze whether a tax is creditable. And it also changes in lieu of income taxes rules, removing the attribution requirement for determining if a tax is creditable under those rules. So a big change.
So as Elizabeth mentioned, the taxpayers are permitted to apply those old regulations, but with a few modifications. And this is sort of consistent with the policy. Why was there this sea change in 2022? Countries were beginning to impose digital services taxes and other extraterritorial taxes, and Treasury wanted to get out ahead and say, no, we're not going to grant a foreign tax credit for those kinds of taxes. And so the one modification that we saw in the notice is that digital services taxes specifically, which tend to be imposed on a gross basis taxes cannot qualify under the regulations, where it may have been uncertain under the old regulations. If they did, they're now modified to clarify that they cannot.
Gotcha. You've already started to answer this next question a little bit, but just to get our arms around it, to what taxes exactly does this apply?
So the notice really gives relief to, I would say, 3 buckets of taxes, notably to 3 buckets of taxes: Brazilian corporate income taxes, which prior to the Brazilian transfer pricing reform did not meet the arm's length attribution requirement; services and royalty withholding taxes, which no longer have to meet a source-based attribution requirement; and finally, non-resident capital gains taxes, which didn't meet an attribution required for the most part under the 2022 final regulations. And so taxpayers, if they wanted to take those taxes as creditable taxes, needed to rely on a double tax treaty or an income tax treaty.
And so that's one thing that the notice does. It's not just that those taxes are creditable. Some of those taxes might have been creditable, as Elizabeth said, under a treaty. And so it reduces the sort of stress associated with taking positions under a tax treaty. Because the notice provides relief to claim them as under domestic law, taxpayers don't need to go through the procedural and other headaches that might be required to invoke a treaty.
Sure, that makes sense. Well, maybe we can talk a little bit about the time aspect of the notice. To what time frame does this apply? It seems like the relief period might actually be fairly short. Is that accurate? And if not, how does it work?
The regulations that are essentially now being pushed back applied to tax years beginning after December 28th, 2021. And so for calendar year taxpayers, it's 22 and 23, and the relief is for tax years ending on or before December 31st, 2023. So for a calendar year company, it's reasonably straightforward to apply to 22 and 23. And this can be important, for example, to address the Brazilian legislation that changes when those taxes might be creditable and certain technical rules. For example, elections under Brazilian law might cause a portion of the tax to be voluntary. Those issues essentially go away for calendar year companies. For fiscal year companies, it's less clear, and the notice does not provide all the relief that we might have hoped. For a fiscal 2024, right, a year that ends in the middle of 2024, that's not within the relief period. And so those issues about creditability will still need to be considered during that period.
And if we kind of consider what the government is thinking of doing after 2023, because as Micah indicated, the relief period is fairly short. They've certainly indicated in the notice that they're considering comments to the regulations and changes to address those comments. They've also talked about the possibility of extending the relief period. And so we know already that they're going to have to change the regulations to address Pillar 2 taxes. And so they may take this opportunity to extend the relief period, we would hope, so that they can fully address those comments with respect to, and the changes that they'd have to incorporate in the regulations with respect to Pillar 2 taxes. And once we get the updated guidance, we can see a couple of scenarios. There's probably more than that, but just to throw out a couple, they could reverse course and go back to the prior credibility regulations with some modifications to address targeted taxes like DSTs or maybe non-resident capital gains taxes. Or they could take this opportunity to completely rework the architecture of the regulations and adopt a different technical framework than the 2022 final regulations.
So as a last question, what about from the company perspective? What could they be doing? And especially companies that might have already filed for 2022.
So thanks, Scott. That's a great question. I think we have put that into 3 buckets. There's just compliance, right? For 2022 and 2023, the law has changed. And so there's an availability to claim foreign tax credits. That might involve amending 2022 if that tax return has already been filed, and considering positions going forward in 2023. There's also financial reporting, right? This can have a significant impact on the foreign tax credits claimed on financial statements, and that's one consideration. I think the last point is the government has shown more than ever that they are being flexible and actually reversing course a little bit on what's here. And this is a great opportunity for folks to speak up and try to contribute to the next round of guidance that hopefully doesn't create as many problems as we've seen last time around.
Just fantastic insights. Micah, Elizabeth, thank you both so very much for being here, and look forward to speaking with you again as this develops. Thank you.
Thanks,
Thank you, Scott.
And to our viewers, thank you as always for watching, and stay with Policy on Demand for the latest developments in Washington and around the world. Take care.